Hey, you guys, this is Tamiya Robles. I am a credit repair expert specialist. I am the owner of FixMyCreditNow50.com. I'm the host of this podcast, Coast to Coast Credit. Welcome. So, a little birdie got in my ear and told me about this topic here where Capital One has done this huge $35 billion deal where it has since acquired Discover, which is major. So, I wanted to look into that more. I have an opinion as usual. My opinions are not common. They're not what most people think about. But I'm gonna just wait and watch these videos with y'all, and then I'm gonna give like my little reaction throughout this live, and we'll talk about it. All right, so let's start off. The first one is from Yahoo News, so we're gonna check that out and see what's good.
Taking a look at two trending tickers on Yahoo Finance shares. Discover Financial jumping this morning, looking at gains of just about 12%. This comes after Capital One announced that it is going to buy the credit card lender in a deal valued at $35 billion. Now, this deal pulls together two of the top six credit card companies by purchase volume. So putting this in perspective for everyone, the merger could have big implications for competitors like Visa, MasterCard, and American Express. And this is one of the angles that our executive editor, Brian Sazi, is digging into on
So what it
our
sounds
homepage
like,
here this
it sounds like, let me rewind that just a smidget.
homepage here this morning in our blog, talking about what this page
So
here
what it sounds to me
on
like
our
Capital One is now stomping with the big dogs. I mean, it's now up there for crying out loud, fourth in place to Chase and American Express. Damn. City, I didn't even know was like that, but wow, that says a lot. That says a lot.
executive editor Brian Sazi is digging into on our homepage here this morning in our blog, talking about what this would mean here for the broader financial industry, for the broader credit card industry. But again, this creates the largest credit card company by loan volume. And we know Capital One being backed by Warren Buffett here, this really enables, ultimately, you can make the argument, better compete with some of those Wall Street behemoths.
I didn't know that Warren Buffett backed Capital One. I did not know that. I was going to say never in my life, but I'll look into that. I wasn't aware.
That are out there. And we're seeing that reflect at least some of that optimism, obviously, in Discover shares today, although Capital One under a bit of pressure. Not exactly a huge surprise.
Yeah, some of the financials that they're talking about on this deal, $2.7 billion in pre-tax synergies, also return on invested capital of about 16% in 2027 is what they're expecting, an internal rate of return of about 20% here. There was a conference call this morning. We'll see what more continues to come out of the discussions as these companies are looking to then solidify this moving forward as they hope to get it past the regulatory sniff checks. But as of right now, as you were mentioning, bringing together two companies, huge track records of some of the, as they would say, resilient financial results. It's a larger question for me, I think, and even as we were talking about it during our meeting this morning, what is the core customer that they're going after? This is not the same type of customer that Discover has on.
Yeah, I was going to say, who is their target audience? Because, I'm going to keep my mouth shut until the end, but it's got to be a different dynamic now. It has to be a different group of people that they're targeting. I have a lot to say. But we'll see. We'll see what he says.
On their balance sheets that an American Express does. And so as you think about that, it is a larger question of what some of the net loss or net interest expenses that they have to think about with that customer are. And then ultimately here, the shareholders at the end of the day, too, they're saying that Capital One shareholders are going to have about 60% and Discover shareholders about 40% of this combined company once everything is fully consummated in the deal as well here.
Yeah, certainly. I think the vibe on the street here early this morning is it makes a heck of a lot of sense here in the longer term, especially when you're going up against some of those larger players. RBC, one of the analysts here on the street, echoing that sentiment this morning, saying that they believe the combination of Capital One and Discover should be strategically compelling from a competitive perspective. But once again, you're seeing some of that pressure on shares of Capital One this morning. A lot of that probably tied to what you're looking at on your screen there in the lower third, the $35 billion price tag that they are paying here for Discover. So again, we will see how it trades for today, but the early vibe on the street is strong here for this merger.
Okay.
Let me show you.
Right. Wow. So interesting. Let's check out another video clip, news clip rather. So let me get out of that one. I do have an opinion, yo. Like, I know my opinions are gonna be much different than most people's. So be sure to check out everybody else's reaction videos and responses. But right now I want to look at this one, same thing as Yahoo Finance, and they're talking about how it affects the consumer. Hold on. I just had it and then I lost it. Y'all just bear with me. But be sure to, while I'm figuring this out, be sure to like, comment, subscribe, share, all of that. What do you think about the merger? Like, what are your thoughts? Are you surprised? Because when I found out, I was mad surprised. Capital One. And what do you think about now that that Capital One has gone from like a lower end credit card to now playing with the big boys like Chase and American Express? Let me know your thoughts. So anyway, all right, I think this is what this could mean for the consumer. All right, cool. Boom. This is a video clip again. No, this is from CBS Mornings. So let me share this with y'all. Put it on the screen and let's take a look at what they have to say.
In this country, two of the biggest credit card companies, Capital One and Discover Financial, have agreed to merge in a $35 billion deal. If it goes through, it could have big implications for consumers. Jolene Kent has more. Jolene, good morning. So explain to me, what's the likely impact on credit card users?
Vlad, good morning. Credit card users, for now, we're not going to see any big changes, but some consumer advocates are saying this deal is concerning because it will result in more consolidation in the banking and credit card industries, which could mean less choice down the road for consumers. Now, Capital One is one of the larger banks and credit card companies in the U.S., and Discover is one of 4 major credit card players, but it's the smallest among Visa, MasterCard, and American Express. Now, Capital One, of course, stands to benefit a lot from this deal, given that Americans right now are using credit cards more than ever before. Credit card debt is at record highs. It's currently sitting at over $1 trillion.
Wow.
And on top of that, the average interest rate on a bank credit card is roughly 21.5%. That's the highest it's been since the Federal Reserve began tracking this nearly 30 years ago. So while that's good news for the credit card companies, it's a big question mark for consumers, right? Capital One CEO, however, Richard Fairbank, said in a statement late last night that Capital One and Discover could more aggressively compete against those larger credit card companies once they're a combined company. But of course, before anything can happen, this deal has to be approved by regulators, and you can bet it's going to receive significant antitrust scrutiny from the feds. Capital One hoping to close this deal at the end of the year or early next. Jerika.
Okay, so that really didn't say much of anything about the consumers. I was going to look at another video, and I mean, we could still do that. It does give some insight. I see where they're going with this. I see why the credit industry is changing drastically. I understand why it's happening. I don't agree with it. I don't like it. It's hurting us all. But you know, in this world where the rich stay rich, right? I mean, that's what's going on for the most part. Let's look at one last video clip. This one talks about what we should know about the merger. Okay. Now, I didn't see any of these videos, by the way, so I'm just hitting play, and I gotta suffer through the commercial. So let me do that real fast. But I'm watching this with y'all. You know what I mean? So definitely speak your mind, leave a comment or whatever. But this is new to me. And I'm assuming obviously this is new to y'all as well. So let me share my screen and let's get into this final clip. This is through CBS News. Just making sure everybody has the credit where credit is due. Oh shit, I got
$1 agreement to acquire. Capital One has announced a $35 billion agreement to acquire Discover Financial Services. The two firms are the 4th and 6th largest companies issuing credit cards to American consumers. They'd be number one if the deal is approved by regulators. For more on what that agreement would mean for consumers and the economy, we're joined by Lucinda Shen. She's a financial technology reporter at Axios. Lucinda, thanks for being with us. Why does this make sense for each side in this merger?
Sure. So there's a lot of reasons why this deal makes a lot of financial sense for Capital One and Discover. So to start things off with, why now? The answer is quite simple. The price is cheap for Discover. The company has really lagged behind its competitors on the stock market. When you compare it over a one-year basis to its other players in the space like Visa or MasterCard or even Capital One, they've all been up around 20% or more in the last 12-month period, while Discover has really lagged behind. And one big reason for that, and it's also one big reason why Discover makes sense to enter into this agreement in particular, for Discover at least, is that they are currently dealing with a lot of compliance issues. They've been issued a consent order from the FDIC. They've also been dealing with allegations that they overcharge merchants in years past. So those are
What that sounds to me is more of a buyout. It sounds like Discover's just trying to save themselves. And Capital One, this was a huge business move, great opportunity for Capital One.
parts of some of the very major reasons why. And it's also meaningful to mention that the entire credit card payment space right now is incredibly complex. So if you are a consumer right now, the credit card may look like a simple product, but you're actually passing through several different players. So you are dealing with the card issuer, and you're also dealing with the credit card network that communicates with the bank, with the merchants. And so this simplifies that entire process. And so as a result of that, by Capital One buying Discover, which is a network, they are now simplifying the stack. They are now, in theory at least, paying less in fees.
So if they're paying less in fees, would consumers,
We're paying less in fees in theory? Is that what, did I hear that right? Let me rewind that, yo. Let me rewind that. In theory. Oh shit. I went too far back. Hold on. Let me see.
By Capital One buying Discover, which is a network, they are now simplifying the stack. They are now, in theory at least, paying less in fees.
So if they're paying less in fees, would consumers,
In theory, we're paying less in fees, guys. Just like Monopoly. Okay. Just like playing the actual game in Monopoly, where your money is in theory. It's not real, but okay. Let's just keep going.
what's the upside for consumers by from this greater streamlining? Do they get lower annual fees or anything good for them coming out of this?
So that's going to be the big question that regulators are going to be asking about this deal. I'm sure folks have seen the headlines at this point. And as you mentioned earlier, this is going to be the biggest credit card company by volume if this deal is completed. And so one of the biggest challenges that Discover and Capital One are going to have to say is they're going to have to convince regulators that this is good for consumers. One argument that they're definitely going to make is that Discover is the smallest credit card network. They're the fourth. They're the smallest. They're the fourth of the four large ones.
Like, God damn, answer the question. Are we going to have lower fees or not? Like, we don't need to hear you repeat yourself. Jesus, I can't stand. This is why I don't watch the news. This is why I don't watch the news. I get my facts. I do my research. I go to the source. But Jesus, just the guy asked a straightforward question. Give a straightforward answer.
States. And by virtue of that, they are going to be able to, by having this merger, they will be able to compete with Visa and MasterCard, which currently is the big bad in the network space. A lot of regulators and senators have already been concerned over how Visa and MasterCard.
It's a simple yes or no. And all she basically did say was that they're going to compete with prices. The hell?
Have about 85% of the market share in the network space. So if they can argue that this merger is good and in a way that they can compete against those two players, they might have a good chance of making this deal happen.
And just in the short period we have left, does this tell us anything about the state of the economy, either the way consumers are behaving or opportunities for companies like this?
Let's see if she answers it.
So I think what this deal really tells us is that
so she doesn't know. Be careful. I keep telling y'all, like, so hard. Listen, words are important. People, the English language, the words in the English language are very important. This man is legitimately asking straightforward questions that the consumer would want to know. And her response is, I think. It's not about what you think, it's about what are the facts. What is the actual fact? Not in theory, not assumption, not presumed, like none of that. Like, what's up? What's good? What is going to happen and how will it affect the consumer? You see, she's looking off and shit, like, I think. No, don't think. Tell us facts, man.
There has been some sense that the
Down.
consumer in general, I think, is in a stronger shape, in a relatively strong shape. They have, however, seen some weakness when you're looking at the delinquency rates for Capital One and for Discover. But on the bright side and on the upside is that this deal is happening, and that the deal has been agreed upon, I should say, by the two players, and that it's coming at a premium to the market price of Discover currently on the market. And what that does tell you is that Capital One at least has confidence that this company is going to grow and be accretive to its own business model.
Wow. Thanks for nothing, lady. So, correct me if I'm wrong. Did she answer the question? Like, did she answer the question? That's all I want to know. Am I making this up in my head? And she did answer the question. I wasn't paying attention or whatever because I was listening. And to me, from what I heard, she was not answering the question. Like, so, lady, does this have anything to do with the consumer spending habits? Well, you know what I'm thinking is so on and so forth, and therefore R2 art thou. And the merger is going to happen. It's going to be great. We're going to be merging. We're going to just keep merging, and the merger is going to be great. We'll be up there with Chase and the other people, Amex. Great. We want to know. So does that mean less fees? In theory, the fees are going to be great. They're going to be in competition with the others. Like, what the hell, man? This is what I'm telling y'all. Listen, this is on some bullshit. Okay. This is my opinion. I'm just solely stating my opinion. A lot has changed since the pandemic, y'all. Y'all started getting smarter. They didn't like that. Y'all learned how to fix your credit. Y'all learned to fix your credit and start getting more credit cards. And then y'all figured out how to utilize your credit cards and pay them down and buy stuff and pay shit off. They didn't like that because before, when everybody was happy and ignorant, we had debt out the ass. And we still have debt. But guess what? We know how to use our debt now. We know how to manage our debt now. Okay. Don't let the okey doke fool you. Don't let them hit you with that. Because just because we're trillions of dollars in debt doesn't mean we don't know how to manage our debt properly. Okay. The problem is, can the consumer manage the debt or not? It doesn't matter that you're going to always have debt. If you buy a house and you got a mortgage, that's debt. Are you paying it on time? Is your credit score going up? Can you obtain more credit cards? Are you paying your credit cards down? You paying them on time? Yeah, all that is debt. Your car note, your mortgage, your utilities and stuff, that's debt. So for her to tell you about the consumers being in debt in the trillions, that doesn't mean anything. That doesn't mean anything. I think this is a bunch of crap. And the financial institutions, the creditors, they're all trying to bounce back from us fixing our credit over during the pandemic and beyond. That's why they have the FICO 10T. People, pay attention. The FICO 10T goes back 2 years. After the FICO 10C, then there's going to be a FICO fucking 5, FICO 10 5, FICO 10 F for 5, whatever they want to call it. Then they're going to go back 5 years and 10 years and so on and so forth, right? They're making it more difficult for y'all, but you got to learn how to play the game. First and first, mostly, you got to get your credit repaired. I don't know how many times to tell y'all, time is running out before you can't fix your credit. Okay. We've been in this FICO 10T already for at least, has it been a little over a year now? The clock is ticking before they issue the next FICO scoring system. Once they do that, then they're going to go back even further and your score is going to be lower, blah, blah, blah. Get your credit fixed before you can't fix it. Run and get them credit cards. Now, if they're not addressing the fees, so in order to recover, I mean, at the end of the day, this is a business move. Okay. It's amazing for Capital One. It's an L for Discover. Discover, this is the way they can still stay in the game. Again, this is my personal opinion, but this is the way they can stay in the game. Okay. By having Capital One buy them out. Discover used to be them people. It wasn't that hard to get a Discover card. You know what I mean? But now this brings them up a bit, but it's a definite win for Capital One. Now, professionally, you lost 35. It was a business move backed by Warren Buffett. That's what's up. But at the same time, they got to recover that 35B. That 35B has to be recovered by what? The fees. They have to. That's why she couldn't say, "Oh no, it's not high fee." Now, in the beginning, like once the acquisition goes through and all that is done, they might have these little quirky sales to bring in more people, to bring in more customers, as you should, as every company does, every business does or should be doing. But then once you get in there, then they're going to hit you with the fees. You got to know how to go around the fees, people. You got to still know how to play that game. So now that Capital One is going to be one of them big boys up there with Chase and Amex. That was a great question. Who are they advertising to? Who are their customers going to be now? Because again, like I'm so surprised at Capital One. Capital One used to be one of those pay, what do you call those paycheck cards, one of those cards like the rush card joints, right? Where you get your paycheck and you get it on the rush card. That's what Capital One used to be. Remember y'all back in the day? And I know I sound old as fuck, but how do you got to know where you were in order to have an idea where you're going, right? That's why it's good to learn history. So it's funny that I'm saying my old head stuff like, yeah, I remember when Capital One used to be like a baby fat card and a rush card. That was just a card. That wasn't a bank. That was connected most times to a bank like JP Morgan or whatever, which is Chase. You know what I mean? So now, after that, after it was like a payday card where you just get direct deposits in, because I used to be one of them people, one of them broke ass people. I couldn't get in with a bank account because my credit wasn't shit and I didn't have all my resources, but I'm working. I would get a rush card. Okay. I would get a Capital One join. But then after that, then the Capital One bank started popping up. Y'all remember that? And I'm like, did that say Capital One? Look at Capital One doing big things in life. Wow. Wow. That's what I remember. I think I was in New Jersey right before I married my ex-husband. I was like, that Capital One? Sure enough, it was Capital One. So it went from being a payday card to a bank. Now Capital One has acquired Discover and is one of the big boys. What does that mean for you? That means that they don't fuck with y'all minions anymore. They don't fuck with the little people anymore. They want people with the big monies. That's what it is. So overall, my opinion is like, it is what it is. It's business. You know, keep the rich stay rich and the poor stay poorer. They're probably going to make it harder to get a Capital One card. They'll probably make it harder for you to increase your limit before. I mean, you just followed the guidelines and fixed your credit, paid for 4 months on time, and they used to automatically give you those increases. Now they're gonna be like, sorry, little poor people, we're with Amex now, so go somewhere else. That's what I'm thinking. Cause they grew up, you know what I mean? They grew up like just like we grew up, and we used to be young and then teenagers, and we decided to be more responsible. And some of us got classier. That's what Capital One did. And then some of us, once we made it to the top, we were like, I don't know them ghetto people down here. I've never been to the projects before. You know what I mean? And that's how I think it's going. That's what it is. I mean, you can't knock the hustle. Yes, I do believe the interest rates are going to be higher. The fees are going to be higher. You know what I mean? Now, I just think it's a little fucked up that, us little minions, we supported Capital One. We got them to where they're at right now to be able to even buy out Discover 35 billion. I didn't even know Capital One had it like that. They're starting to look a little sexy now, right? That's like the dude from the hood, from your old neighborhood, and he was cute a little bit maybe, but he was like kind of broke, and you were like, I'm looking for some more stability and shit like that. And then you go mess with these dickheads who ain't got it like that, but they were cute, you know what I'm saying? And then you married them, had their kids, divorced, and then you step back on the single scene, and there's Capital One looking good, paying shit for $35 billion. Looking real sexy there, Capital One. I'm just saying, metaphorically speaking, you already know. You know what I'm saying? Some of y'all, I don't roll like that. You know what I'm saying? But anyway, okay, Capital One, get them, but don't forget where you came from, Capital One. And it sounds like you're on the way. And what that means, what I would hope is if we've already been long term Capital One clients, like maybe they'll consider like, hey, we won't increase anything for the first 2 years or for y'all, just as a thank you, right? For being our bottom bitch. Because that's what we are. We help them get to the top. You know what I mean? For y'all holding it down for us so we are able to acquire Discover. Thank you. Hopefully they do that. So with at least prepare us for the fees and then give us the choice and the option. But if not, and they don't care about us, then yes, please be aware there's probably going to be some fees. You know what I mean? It's a business decision. It is what it is. But now, hopefully, you guys are starting to understand this is a change in this credit world, in these financial institutions. They're changing. And then you got Biden talking about, hey, I'm gonna wipe out all of your student loans. When real rap, that's a trade line you could have used to get an Amex card or to get a Chase card. He's sitting here wiping away fucking debt. That's not what's up. That's not helpful at all. Y'all think it is, but it's not. And I'm gonna do a video on that. Okay, this is whatever. I digress, but tell me what y'all think, because I'm always emotional over this shit. I'm gonna give y'all facts. I'm not surprised because business is business. Nothing can stay the same in business forever. You know what I mean? Like, you gotta make your bread. If I had 35 billion to acquire, Lexington Law, I would do it. But I would definitely give a discount or give my day ones, a heads up, like, hey, I'm about to buy Lexington Law. Shit's about to change a little bit, but for the people that's been rocking out with me, thank you. And as my, little sign of appreciation, I can't boost your credit score, but a month free, you know what I'm saying? Or something of that nature, 50% off the next month. I don't know. Let's see. We'll see. All we could do is see what's going to happen. Are y'all going to stay with Capital One? Are you concerned about the fees and how they're going to treat us moving forward? Like, you think they're going to act like they don't know us now? I don't know. So I'm gonna hop off this thing. I need to start talking about these student loans because my people are hitting me up for the student loans. Deletions, I told y'all, I got these services out here for y'all. Y'all need to get yourselves prepared. Okay, fix your credit, build. Don't fix it and just walk away. Don't fix it and just get a crib. Don't fix it and just be like, I'm good. You're not good. You need to stay on top. If you are wanting to know more about financial freedom and breaking generational curses, this is what you need to do. Get some money, get your VA shit together, get your 100% disability through us, fix your credit through us, all of this, okay? Get your house through us, multiple houses, start investing because they're forever going to pull fast ones and it's not in our favor, okay? All right, I'm done rambling. But be sure to like, comment, subscribe, share, download, donate, check out my podcast, Fix My Credit, Coast to Coast Credit. I'm sorry. And all that good shit. But I'm done rambling. In the meantime, I wish you guys the best